This episode is brought to you by Katana, a DeFi-first chain built for deep liquidity and high yield. You'll be hearing more from them later in the show. Blockworks Digital Asset Summit, which is crypto's premier institutional event, is back in London October 13th to 15th. It'll have speakers from leading global funds, financial institutions, DeFi protocols, crypto companies, and policymakers. Think BlackRock, Circle, Coinbase, the UK Parliament, Jito and Marinade, all under one roof. Notable names include Joe Lubin from Consensus, Hadley Stern from Marinade, Rebecca Reddick from Jito Labs, a whole bunch of Blockworks folks, and more to come. There's a VIP dinner October 13th, open to speakers and VIP ticket holders only. That will sell out, so act fast. And it's all going down at Old Billingsgate, London. Use the code LIGHT100 for £100 off at checkout. We'll see you there. Nothing said on Lightspeed is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the companies, funds, or projects discussed. Hello and welcome back to another episode of Lightspeed. I'm your host, Jack Kubanek, joined today by my good friend Carlos Gonzalez Campo of Blockworks Research. Happy Monday, Carlos. Glad to have you back on the show.
Yeah, thanks for having me, Jack. Markets are red, but what can you do?
What can you do, man? What can you do? It seemed like there was some crime happening over the weekend when all of these, Solana starts pumping randomly on a Sunday, and then on Monday morning we get two different announcements of new Solana DATs. Kind of strange timing, but
yeah,
such is life these days.
Insider information in this industry is just crazy. Yeah.
So something I've honestly never understood is you can't insider trade crypto tokens, right? If the US regulators wanted to go after you for doing this, you would get in trouble. But it just seems so ubiquitous. And the one big case of it happening was these Coinbase employees, right? And I think the DOJ just dropped that case. So, but you can't insider trade, right?
Yeah, I think legally you can't, but in practice, you see this all the time where I think for every DAT you have seen this front running the views of the DATs or the DATCos. It is not just for the DATCos, right? Every time there's a new product or a new governance proposal for a buyback or whatever, you see always the token pumping before the actual thing. I just think it's it's obviously not a good thing, but it's just something ubiquitous to the industry.
Yeah. Anyways, this is too deep to go in the first 3 minutes of the episode. We have some quick housekeeping to start out the beginning of the episode. One thing I want to note is that Blockworks is hiring. We're hiring all sorts of roles, and we have hired out of the Blockworks community before. We have a very active community that listens to these podcasts, that engages with our telegrams, and so if you like what you hear, if you like hearing from Carlos today, you could go be his coworker and bug him in Slack all day like I do. I believe we have some analyst roles open. We have a data analyst role as well. Carlos, do you have any alpha to offer on these job openings? It's candidly not really my side of the company, but
yeah, we have some data analyst openings. We also have research analyst companies. So whether you like writing for research or you like doing data analysis and putting up a bunch of queries for our crack data team, definitely apply for the job. It's the most fun team I've ever worked with. So yeah.
Most fun team in all of crypto, in all of the world, probably, if I had to guess. Come join. On the podcast side, we're hiring an Ethereum podcaster, which you could be the yin to my yang. So come hang out. And we also have a producer editor for someone who's done kind of a daily news show. We are hiring for that. So make of that what you will, and please apply. I think that's all. Today, it's been a little while since we've done one of these, so I'm very excited that we're doing a roundup episode. Back in the day, we used to do one roundup per week, but it turns out that maybe there's not always enough Solana news to do that. But I really always enjoy these episodes when we do get to do them, because I get to sling my takes irresponsibly as opposed to just asking other people to do it. So we're just going to be walking through some of the big stories this week. Carlos and my takes on what's going on in Solana land. And I think the best place to start is probably going to be the big news this morning as we're recording, Monday, August 25th, that we got 2 more Solana DATs. So Bloomberg this morning reported they scooped. There's a scoop that got away from me. I was fishing in that pond, but Ryan Weeks from Bloomberg got it. So good job, Ryan. Galaxy, Jump, and Multicoin are seeking $1 billion for a Solana DAT. That would make it the largest Solana DAT by more than double if they, went and then bought all of that Solana. So this is obviously very big news for an ecosystem that, as we've talked about so far, has been kind of, not sitting at the cool kids table when it comes to the Wall Street DAT frenzy of the summer. It's been hot Bitcoin and ETH summer, and we really haven't seen very successful Solana DATs so far. So, and then on top of this, we also saw Sharps Technology announced a $400 million private placement, just a mere $400 million. Not very interesting. No, but this was from the co-founders of Jambo, which is the other Solana phone. Bet you haven't heard of Jambo before, but it's like a $99 Solana phone. I don't know if they're still making it. They're obviously doing a DAT now. And one thing I found really interesting from this one is they signed an LOI with the Solana Foundation, which said that the foundation is going to sell $15 million worth of SOL at a 15% discount to Sharps in exchange for the proceeds from a public sale of the stock. And I guess while we're on the topic, in the Bloomberg piece, they mentioned that, the Solana Foundation has given its endorsement to the effort, according to sources. So whatever that means, the Solana Foundation is clearly more involved with these DATs today than they were, maybe a couple of months ago. So with all that on the table, Carlos, when you saw these DATs when you woke up this morning, what was kind of your initial takeaway?
First takeaway is probably like just don't fight the flows. I remember when I saw this DAT codes like first appear on Ethereum side, like my first reaction was one of rejection kind of, or you know what I mean? Like this does not make a lot of sense. It sounds kind of scammy. But at the end of the day, Ethereum DAT codes had bought $1 billion of ETH, and they now account for 2.5% of Ethereum's total supply. So obviously in terms of just buying pressure, it has been very significant, and it has led to Ethereum outperformance. And I think it can have a similar effect for Solana. We can have an opinion on whether it's good or if it's bad or are they sustainable. But for the short term, I think it's going to be a sustainable stream of buying pressure for SOL. And it may be positive for the asset. And you have seen that kind of in the past few days, front running the news. I think once these DAT codes start buying SOL, it could be very significant for SOL, the asset.
And I get the sense that we're not done with these mega DATs in Solana land. I think that a lot of people are looking at, the blockchain that has a lot of developer interest right now. Probably the most usable smart contract blockchain at the moment, with a lot of big upgrades on the way, Alpenglow and so forth, which we'll get into, and seeing that it has basically, not been tapped into by the DAT craze yet. And whether or not it'll be successful, I think that's a conversation. I think Wall Street is much less familiar and comfortable maybe with Solana than they are with Ethereum, which is, several years older, but they're certainly going to try. The effort is going to be made. I bet we'll see, at least one more $1 billion DAT before all is said and done in Solana land. And it's also just interesting to note that the Solana Foundation is now involved. Like you said, Carlos, I think maybe the foundation and us and me and you were, not the most interested in this trend when it first came out. It's not the most inspiring use case that a company will buy crypto and the market values it for a little bit more than what that crypto is worth. But for better or for worse, it is what the market is demanding right now. It is clearly a big driver of price. If you look at Ethereum, breaking an all-time high, largely on the back of some very successful DATs. And so, I really don't have inside info here, but just my sense is that the Solana Foundation is coming around to DATs and saying that whether or not this is a long-term game remains to be seen, but we need to in some way be involved in this because it is a major driver of price. It's what the market is demanding. And whether or not we like it, these things are going to come out. So, why not back the multi-coin DAT, which we can say is quote unquote Solana aligned or something. So I think those are two interesting pieces to note as well.
Yeah, I think they're running like the Tom Lee playbook. Like Ethereum like had this narrative like, hey, it's dead, like it's this antiquated system, it does not scale. And then Tom Lee came on and gave like this like very left kind of explanation for TradFi, like Ethereum is a stablecoin chain, it's like the ChatGPT moment for crypto or whatever. And like TradFi like instantly kind of like get it, I don't know. And then so I think they're trying to run the same playbook for Solana, where you find like a good like a spokesperson, like a good figurehead, if you will, like to explain Solana to TradFi and like kind of get this narrative going on the TradFi side of things. I think that's one of the good things about that code, that you can kind of like bridge the gap or this educational gap between like the technology and the TradFi side. Like one thing that I've been extremely impressed by is just the pace of accumulation on the Bitmine side for ETH specifically. Like, do you know how long it took Michael Saylor to acquire 1% of BTC supply?
Like several years, I would think.
Yeah, like 3.5 years approximately. Do you know how long it took Tom Lee? Like 1% of ETH supply? Yeah, 40 days. Like,
wow. Yeah.
it's kind of insane. Like, and it's definitely like, for me, it's also like a caution, like a tale of caution, because it does speak like the market is quite frothy, in my opinion, right now. And maybe this still has legs to go, but like acquiring like 1% of each supply in like 40 days, like versus what took Michael Saylor like almost 4 years, like it definitely speaks like the market is quite hot right now.
Incubated by Polygon and GSR, Katana is something different, a purpose-built DeFi chain that's focused on giving the best experience possible. It does this by sustainably generating deep liquidity and sustainable, real yield. Katana is built from the ground up, with DeFi mechanics to keep your bags from just sitting idle. All you need to do is use your favorite protocol, and Katana mechanisms do the rest of the work for you. Katana is launching with a notable ecosystem of primitives, assets, and partners including Morpho, Sushi, Lombard, Chainlink, and Yearn. Katana is a DeFi-first chain, built for deep liquidity and real yield, by redirecting chain revenue back to active DeFi users. The 1 billion CAT campaign is live. Bridge and deposit directly into vaults in one simple click, and start earning immediately on your ETH, BTC, USD, and more. Thank you to Eigenlayer for making this episode possible. Corporate and protocol treasuries face a major challenge today. Cash and traditional instruments are losing ground to inflation. ETH, SOL, and other proof-of-stake digital assets offer a unique solution: exposure to the asset's performance, along with access to long-term, sustainable staking rewards that are uncorrelated to traditional interest rates. Using institutional-grade liquid staking tokens unlocks access to capital efficiency for advanced management strategies, while restaking provides the opportunity to participate in the core infrastructure powering the verifiable cloud. For CFOs, DATs, and corporate treasurers, the path to integrating liquid staking and restaking should be risk-managed and aligned with long-term strategic goals. The Productive Treasury Report outlines practical adoption and a forward-looking vision for the role of the modern treasury as a strategic enabler of new technology. Thanks again to Eigenlayer for sponsoring this episode. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. Yeah, if you get some of these people involved in DATs, and ask them like, hey, this is a trade. It's a trade that is a little silly maybe, or kind of based on a mispricing of some assets. Explain why DATs are not just a big scam. I think one of the big things they would tell you is, well, look how fast we can acquire ETH. Like, no individual could buy ETH as fast as Bitmine can buy ETH. But does that really strike you as like an actual skill or something anyone should care about? I mean, I feel like maybe that's not even true. Like, yeah, is the speed of accumulation anything? Does it really matter? Or is it, introducing unnecessary risk and doing something that anyone could do if they had as much money as Bitmine has?
Like, I totally agree with you, but to give you like the other side of the argument, like just for the sake of it, I think what some people would say about DATCOs is that they can be actively involved in the network, something like, for instance, ETF issuers cannot do. So let me give you an example for Solana, like DeFi DevCurve. Um, they are running like their own validator. They're going to vote in favor of Alpenglow. They have put out like this deep dive report on it and like explaining to the general public what it means for Solana. They have launched their own like LST. That LST is integrated like with DeFi markets. So in that sense, like DATCOs can be a bit more involved, like in the network itself and push its adoption forward. Something like ETFs cannot really do. They like ETF issuers, all they can do is like really just sell their product to institutional clients and give them exposure to the underlying. Whereas with DATCOs, they can like be more actively involved, like in pushing forward adoption of the network itself. So that's kind of like the argument I see in favor of DATCOs, if you will.
No, that's fair.
Yeah, one other thing, like it's the staking yield, like Ethereum ETF, like for instance, Solana ETFs. I think they're going to be approved with like a JitoSOL ETF was like I think a filing for a JitoSOL ETF was put forward by VanEck, if I'm not mistaken.
Yes.
And I
That's
think
something we should talk
Solana
about as well.
ETFs will largely allow for staking. But like one thing about that is that they can stake the underlying, something that, for instance, in Ethereum land you cannot do.
Yeah, that Jito. Thank you for bringing up the JitoSOL ETF. That's something we should touch on for a sec. But it was a brave steel man, Carlos, and I'm proud of you for making this argument, making the best case on the show. But before we move on from that, I think it's just worth noting, kind of a conversation I've been having recently is, okay, we can go raise $1 billion for the new Solana DAT treasury vehicle, but there's still a missing ingredient, which is that in my mind, there still is not a Tom Lee or Michael Saylor equivalent for Solana, which I think those two men have been quite important in the success stories of Bitcoin and ETH in the treasury game. Because as you said, you need someone who can go on CNBC and explain crypto to TradFi people. And maybe this is a bit too simplistic, and I'm sure these companies have other BD functions that happen behind closed doors, but it sure seems to me like, when Saylor goes on stage and is willing to say things that are a little insane, maybe that other people might not want to say, like, mortgage your house and buy Bitcoin or whatever. Like that is, ends up being beneficial for MicroStrategy because you have this kind of unabashed cheerleader who's going to go on TV and kind of say, spout off your mission to all sorts of investors. When I asked people who the equivalent could be for Solana, a lot of names come up, and two names that came up a couple times were Mike Novogratz and Kyle Samani from Multicoin and Galaxy, respectively. So this Multicoin Galaxy Treasury Co. is pretty interesting to me for that reason. I think that two of the maybe obvious answers you would look for who could be the Tom Lee of Solana are those two guys. Although some other folks I spoke with basically said like the Solana Tom Lee is not somebody you've heard of yet. Like nobody knew who Tom Lee was before. I mean, people knew who he was, but on crypto Twitter, nobody knew about Tom Lee before he started, shilling for Bitmine on TV over and over. And so maybe there's somebody in TradFi who has some real credentials, who comes from like a major investment bank, and you'll say, hey, we're going to give you like $10 million to come over to our treasury co and just, maybe mess with your reputation a little bit by being irresponsibly bullish on our stock. And that's kind of where you end up finding this Michael Saylor, Tom Lee type character for Solana.
Yeah, I agree. Like Kyle Samani will be like, he could perfectly explain Solana to a TradFi crowd. I don't know if he's going to be the figurehead. I I saw someone on crypto Twitter. I don't remember who said that Chamath would be the perfect SOL figurehead, which I don't know. I don't know what to think of that, but definitely like the most entertaining outcome sometimes is the most likely. So yeah.
John Charb had a tweet that was like,
Yeah.
"Dear God, please let this happen because it would just be so funny." And I thought that was exactly right. The Chamath Solana SPAC would be really something to behold.
Yeah.
But I guess just the broader point I'm trying to make too is Mike Novogratz and Kyle Samani make sense, but I also think that you don't, how to say this, it's not super hard to explain Solana to a TradFi audience. You say this is the fastest, cheapest chain. It's good for payments. It has these, Ethereum has these issues with it, with the L2 roadmap and so forth. I mean, maybe that's even too deep, but just say it's fast and cheap and it works and developers love it and there's a lot going on. And Trump launched his meme coin there. And, also I worked at BlackRock for many years, so you can trust me. And that's probably all you need, right?
Yeah, I just need to say is decentralized NASDAQ, internet capital markets. It's not just, I do think one thing Solana could benefit from is just taking down this misconception that it's just a meme coin chain. And I think that that's something like a DATCO figurehead could be useful for, like just taking down this misconception of Solana is just for meme coins. But because I do feel like, especially like in more normie or TradFi circles, like it still gets this misconception that it's just for meme coins.
But I also think that there is a way to not have to like deny the meme coin aspect to Solana, which is absolutely there and is going to continue to be there as long as the current DeFi infrastructure still holds. Like, I think you can, or maybe I should say, you shouldn't try to just deny that exists, because then it looks like you're hiding something. But if you look at like the Elon Musk orbit, everything about his companies is super memey. Like, one of them is called the Boring Company, and it's a like, boring holes into the earth or whatever. So there is a way, and obviously like Elon Musk's companies are quite successful on Wall Street. So there is a way to do the meme thing and lean into it. So I think it's more of a question of like, how do I tell the meme coin story in a way that looks a little less like pump fun, pump and dumps, Libra, all the the lowlights, and more Dogecoin. It's fun, it's culture, it's interesting. Like, I think that's probably where that person would go if they were trying to explain meme coins to Wall Street.
No, yeah, I agree with you. I think meme coin, like to paraphrase Ryan Connors, are the permanent state of affairs. Like, I don't think they're going away. And yeah, you're right. There should definitely be a way to like sell that in a bullish sense to a TradFi crowd.
We need to sell DAT in a bullish sense. Sorry. Okay, moving on. Before I guess while we're on the fund, the funds that have been approved side or whatever, not approved, filed for, VanEck, surprisingly, in my view, on Friday filed for an S1 for a JitoSOL ETF. So this would be like a Solana ETF, but instead of, I guess, holding naked SOL and then having like a staking provider, probably Coinbase, that would stake it for you and then provide the rewards. And this has tax issues and some other things that are suboptimal about it. You would just buy the JitoSOL liquid staking token, where the staking rewards are more baked in, and just having kind of a Solana ETF that way with better rewards. And this comes shortly after the SEC, in their whole Project Crypto press run, announced that liquid staking clarified that liquid staking tokens are not in fact securities. And so that would clear the way for a JitoSOL ETF. And Matthew Siegel from VanEck, the head of research, also friend of the Lightspeed pod, made some tweet that was like, we try to be pretty judicious about doing single crypto asset ETFs. We don't do that for just any asset, but we feel like JitoSOL is like a special case, and it's basically worthwhile. So, Carlos, I don't know how deeply you've dove into this specific filing, but did you have an initial take on seeing the VanEck JitoSOL ETF now coming across Edgar?
I was super happy to see it. I think that LST ETF, like a JitoSOL ETF, makes a lot more sense because it's more beneficial to the end investor. And the reason for that, I think we discussed this like in a previous spot, but it's a lot more operational efficient to have like JitoSOL as an underlying than just having like Sol and then a staking provider. And the reason for that is you can have a higher portion of the ETF like with staking exposure. So I can guarantee that the JitoSOL ETF is going to have like a higher staking yield for investors than the Sol ETFs that are going to be staking with third-party providers. So for the end investor, it's a lot better. It's also super bullish for Jito in a sense because they are obviously going to benefit from increased like LST market share in Solana. And Jito does like charge a 4% management fee on the JitoSOL staking rewards. So in a sense, that's incremental revenue to Jito annually. I guess we have to see like how much demand there is for the JitoSOL ETF, but if there's huge demand for it, like it could be very significant, not just for Sol, but for Jito as well.
I would agree with you, Carlos, that this is definitely a triumph for Jito, which I think has not been super discreet about its intentions to try to get a JitoSOL ETF, kind of make that happen. And I pulled up this tweet from Rebecca Rettig, who's the chief legal officer at Jito, and how it started, how it's going, and it shows them meeting with the Jito meeting with the crypto task force of the SEC pretty early on, and then this filing for the JitoSOL ETF. They've been making the case basically that JitoSOL is due to tip router, which sort of automatically routes out staking rewards. It is like the chosen one LST in Solana, and there's even less centralization or reason that this would fail the Howey test than other liquid staking tokens. And this has clearly been a big priority for them in the first year of Trump too. And so yeah, I mean, Jito deserves their flowers. They really grinded to make this thing happen. And I think I would say that it's not just hand wavy marketing BS. Like I think there really is a reason to say that an LST has fewer taxable events and just creates a more efficient kind of way to bake in the staking rewards than this world where you're paying Coinbase a big commission and money is kind of being moved around a lot in the process of these ETF minting and redemption. So congrats to Jito, and I think that it'll be curious to see if there's some damage there due to the fact that JitoSOL is not as much of a well-known name as Solana is. And so do investors want to buy a JitoSOL ETF or do they want to buy a Solana ETF? I don't know how that winds up shaking out, but I do think, objectively speaking, this could provide higher returns than just the naked or regular staked Solana ETFs.
Yeah, I agree with you. I don't know, like that's a good point. I don't know how they plan to market it or like sell it to clients. Like if they just plan to sell it as a SOL like ETF and then just like explain that it has like this like baked in rewards or whatnot, or like a JitoSOL ETF because people are gonna ask like what's Jito and like whatever. So yeah, that's a good point. Like I'll be curious to see like the ticker, how they sell it, etc.
Yeah, remains to be seen. One piece I wanted to touch on moving us forward is there recently was a post on the Solana developer forums kind of formally proposing Alpenglow. And I believe that voting is meant to start this week. Is that right, Carlos?
Yeah, voting is meant to start around, I don't remember the exact epoch, but it would be around Thursday. Like we're recording this on Monday, 25th of August. Like it would start around Thursday and then voting would end beginning of next week. I expect this to pass. I don't think it's controversial like at all. So I think Alpenglow will pass. And yeah, like the headline impact of Alpenglow is like 100x reduction in Solana's finality time to around like 150 milliseconds. And it also has other second order effects. Like you can start looking at reduction in slot times eventually. Voting transactions are no longer an issue. So yeah, I think it's going to be super beneficial for the network, and I think it's going to pass.
Yeah, and we had Brennan from Anza kind of come on to talk about Alpenglow a couple months ago. So go check out that episode if you haven't seen it. It's a good deep dive into not only the reduction in time to finality, but just all the other things that Solana is hoping Alpenglow will do. I guess if I had to poke a hole in this, the really interesting thing will be what this does for FireDancer, which it is now nearly September of 2025, and full FireDancer is still not yet live on Solana mainnet. We have Frankendancer, which people are running and are seeing fuller blocks, I guess. But this, definitely introduces some uncertainty if you're the FireDancer team, which basically has to follow what Anza does and then try to perfectly, create the same a compatible version, but with different code. Which we also did an episode with Michael McGee from Jump that you should listen to. It was very interesting talking about what a challenge that is. And so I'm sure those folks will be watching this very closely. And a lot of how soon we actually see FireDancer depends, I guess, on if Alpenglow is approved and if they actually start producing it sooner. Although I would also say, Carlos, I don't know if you get this sense, but it feels to me like in the Solana world, FireDancer is not as much of a talking point as it once was. Like as Anza has kind of just ramped up and started saying like, F it, we can just scale the chain ourselves. And have proposed Alpenglow, which is this major rewrite to Solana's consensus, and are just seeing performance improvements generally, doubling the block limit, that kind of thing. You just don't hear FireDancer talked about quite as much as it was in, say, 2023.
I totally agree with you. I think ANSA has killed it in the past year. I remember like a few months ago, they put out this blog post highlighting like the roadmap to 1 million transactions per second. And yeah, I think the longer that FireDancer like takes to ship to mainnet, like the harder time they are going to have like taking market share like from the Agave client, because it just keeps getting better and better like with each passing month. So I do think like the ANSA team is not going to like just let the FireDancer team like take all the validators.
Yeah, and it's a massive engineering problem that Jump is facing, and I don't know. I'm very curious to see, I guess I'll say, how the FireDancer experiment ends. I think that if it takes much longer for full FireDancer to go live, Alpenglow is really hard to mimic, and so it takes a couple more years or something before we see full FireDancer. I think a lot of people will start to say like, oh, maybe this wasn't whatever grant, the Solana Foundation paid Jump in order to build this thing, because they obviously are not doing it for free. That was not a worthwhile investment, because you just got Anza to do all the things that you wanted FireDancer to do, but they did it much faster. And I think that's a little bit of a short-sighted argument, because there is also this whole question of path dependency, where having Jump crypto be associated with you as Solana, and also honestly FTX back in the day, was a signal that you were like a serious chain. You weren't another scam in a world where there's lots of layer one scams that claim that they can do all these revolutionary things. I remember reading tweet threads in 2022 saying that Solana is a bunch of bogus nonsense, and they're just taking advantage of the fact that no one understands blockchains to get all these dummies to invest. And I think the fact that it was like, oh, Jump Crypto, which is like a real, HFT firm, is building infrastructure for Solana, like that put a lot of people at ease. And I think that was why it was such a talking point for so long. And, maybe we don't get to this point where Anza is able to attract talent and bring in all these people who could build the chain to be much more performant if FireDancer wasn't involved, because now people aren't excited about Solana. They're interested in Sui or something. I don't know where else that attention would have gone. But I think regardless of how the jump experiment winds up and whether FireDancer truly does, and like maybe this is going to get clipped and I'm going to get made fun of because, FireDancer comes out and it like greatly increases the, Solana's performance. But even if it doesn't, I think that it was probably still a worthwhile investment for Solana to make, and certainly increase the number of people who are willing to be interested in building on buying SOL, even post FTX when things looked quite bleak for the chain.
Yeah, I totally agree with. I like that perspective. Like even if FireDancer doesn't like fulfill like its expectations, like at least it provided this competition that allowed ANSA to like really step things up and attract talent. Like I know that Alpenglow, for instance, was proposed by ETH Zurich, like developers that were previously like that found a vulnerability in Solana's code base, and they managed to attract them to actually build Alpenglow. Um, I do think like FireDancer is going to ship eventually, and it's going to be like even more competitive, like from that point of view. One other thing that could be interesting is if we see FireDancer first, like on another SVM chain for like Fogo, for instance. Because for instance, Fogo is running on a unified FireDancer client. Like I could see a scenario where Fogo just launches FireDancer before Solana, and then we see like how it performs like on another chain.
Sounds like you're gearing up for Fogo fall, Carlos.
Not really, no. It's just just seeing all the possibilities.
Yeah, that'll be an interesting one to watch. I Fogo sort of fell off my radar a little bit. It would ruffled some feathers when they raised 8 million on basically saying, hey, we're going to have like a more permission validator set and only run FireDancer. But yeah, I think it's going to mainnet soonish, right? I'm not fully up to date on it, but that's a really good point that we may actually see FireDancer on Fogo first. Which, I don't. A lot of Solana people might be none too thrilled with that outcome, but in any event, much to watch there. Incubated by Polygon and GSR, Katana is something different, a purpose-built DeFi chain that's focused on giving the best experience possible. It does this by sustainably generating deep liquidity and sustainable, real yield. Katana is built from the ground up, with DeFi mechanics to keep your bags from just sitting idle. All you need to do is use your favorite protocol, and Katana mechanisms do the rest of the work for you. Katana is launching with a notable ecosystem of primitives, assets, and partners including Morpho, Sushi, Lombard, Chainlink, and Yearn. Katana is a DeFi-first chain, built for deep liquidity and real yield, by redirecting chain revenue back to active DeFi users. The 1 billion CAT campaign is live. Bridge and deposit directly into vaults in one simple click, and start earning immediately on your ETH, BTC, USD, and more. Thank you to Eigenlayer for making this episode possible. Corporate and protocol treasuries face a major challenge today. Cash and traditional instruments are losing ground to inflation. ETH, SOL, and other proof-of-stake digital assets offer a unique solution. Exposure to the asset's performance, along with access to long-term, sustainable staking rewards that are uncorrelated to traditional interest rates. Using institutional-grade liquid staking tokens unlocks access to capital efficiency for advanced management strategies, while restaking provides the opportunity to participate in the core infrastructure powering the verifiable cloud. For CFOs, DATs, and corporate treasurers, the path to integrating liquid staking and restaking should be risk-managed and aligned with long-term strategic goals. The Productive Treasury Report outlines practical adoption and a forward-looking vision for the role of the modern treasury as a strategic enabler of new technology. Thanks again to Eigenlayer for sponsoring this episode. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. One other thing I wanted to touch on this week, Carlos, is a repeated thing that we will talk about in these roundups, which is the meme coin Launchpad War. For a while there, things got pretty interesting. If you're watching, you're seeing that I pulled up the Blockworks Research Launchpad revenue dashboard. Really good dash. And you can kind of see that from the beginning of July until the beginning of August. Let's Bonk.fun, the famous Launchpad, was doing, more than 60% consistently of the Launchpad revenue. And Pump Fun was compressed, beneath 10% some days of the total Launchpad revenue on Solana. At the time of recording, that has totally flipped. Pump Fun is back to dominance. I was actually shocked looking at these numbers this morning. August 24th, so Sunday, 91.6% of Launchpad revenue went to Pump Fun. Let's Bonk.fun with 0.09%. Not even cracking 1% these days on the overall Solana Launchpad revenue. It seems like, at least for the moment, the Let's Bonk Linsanity run is over, I guess we could say. I don't know, Carlos. Do you think this is the end of the road for Let's Bonk, or what do you make of the kind of change in fortunes there?
I mean, I'm not surprised. Like I said this before, like when Let's Bonk had like the majority of market share, that people were over indexing like on 2 weeks worth of data. Like it was very coincidental that Let's Bonk started taking market share just before Pump ICO. I think like it wasn't organic at all, to be honest. Like they were probably like, I don't want to get like I don't want to like burn my hands too much, but I think they were probably like paying people to launch or incentivizing people to launch on their Launchpad. And then after a while, like Pump just took back the market share. I think it was like an obvious thing to happen. And another thing that's significant for Pump is that they started buying back their own token with daily revenues. So they're currently doing insane numbers, like on daily buybacks. They're doing like 1.2 billion or something in daily buybacks, which is very significant, like in terms of like just buying pressure. It's not shown here, but there's another launchpad that's also been making headlines in the past few weeks on Solana, which is called Heaven. The ticker is Light. They've also gained some significant activity in the past few weeks, especially like in the crypto Twitter circle. But again, I just expect these trends to be like very sporadic and Pump to remain the leader like over the long term.
Did you get wrecked on Light, Carlos?
I did not. I bought the ICO and then I sold like for a 3x or something and just called it a day. Yeah.
Many such cases.
Yeah.
The Heaven one, they had a really good marketing, but again, I don't know if it's going to be enough to meaningfully take market share away from Pump Fun. Would largely agree with all that you said, Carlos. I had said on this show at the time that Let's Bonk came out. I forget the timeline I gave, but I predicted this. I'm just going to say it. I think it was quite clear at the time that there was no actual reason that Let's Bonk Fun was superior to Pump Fun, what it offered, other than I guess if they were finding my understanding of what was happening is that they were finding like power deployers. So these people whose full-time 9 to 5 is just deploying Pump Fun tokens. The moment Elon tweets something, they'll just make it into a Pump Fun, and then snipe it and then sell it. Those kinds of serial deployers, if you will. Radium or Let's Bonk or whoever, or Bonk, did some kind of BD to get them to launch those tokens on Let's Bonk.fun, because largely users, I don't think, care a whole lot if the token originated from one or the other. And I'll give them credit. Like it worked. While it worked, it definitely worked. But it's a hard thing to keep up over time, especially I think when the Pump team seemed like they took that personally a little bit and started doing a lot more. You saw a lot more tweets from Alan from Pump Fun saying, "Oh, there's no organic runners on Bonk," which feels a little bit like the pot calling the kettle black. But either way, they I think increased their buyback to 100%. Is that right? Great, from 25% initially, which was a very interesting thing to note. And I was publicly like, they don't need to buy back 100% of the token. Like they should keep their profit. But I think for them, they saw like, okay, it's time to the meme of the guy leaning forward in his chair with the video game remote. That was pump fun for a little bit.
Yeah, it's kind of time to lock in. I do think like it's just so hard to compete with a team that like they were first movers and now they have like $2 billion in cash where they have like infinite optionality as to how to gain back that market share and like they can pull so many incentives. So I just think it's so hard. Like they have so many levers to pull. It's just so hard to compete with the pump team like toe to toe on the especially on the meme coin side of things. Like I do think they will remain the leader in this vertical.
So I agree, sort of. I was also just checking. What have you checked the pump FDV recently, Carlos?
Like 2.8 billion, I want to say.
2.9.
2.9. Okay.
Yeah, that's significant. That's more than a 25% drop from the ICO price. So if you held pump, you have lost money.
I definitely lost money on pump.
Yeah.
I do think like it's I do think like the bias is to the upside here, like 25 or whatever you want to call it, 25% below the ICO price. They're making like $1.2 million in revenue in just pouring that into the token. I think it's quite significant. I think like people are like, if I would have to guess, people are like speculating that it's not sustainable, like the amount of revenue they're generating daily.
Yes, I would agree.
Yeah.
I think that what I would say is I'm a little less optimistic about pump than you are, Carlos, maybe, in that after the whole, I think the Let's Bonk phase demonstrated that pump fund doesn't really have a moat. Like it's not that hard to spin up basically an identical product, get the power users to switch over through incentives or something, and they'll be more than happy to do so. Like I don't think there's any reason other than just like the network effect of lots of people knowing about pump that pump has all of the volume that it has. Now, maybe there's some kind of like the rich get richer effect here where pump is just able to take the huge war chest it now has from its token sale and just keep winning this game by continuing to buy back its token and continuing to um, cut deals with streamers to stream on pump fun or something like that. I don't know if they're doing this behind the scenes. I would think that they are.
No, yeah, I agree with you. I think their primary focus should be like on the product side, like owning the front end, because you've seen platforms like Axiom, which are just like trading platforms, like actually do have a moat. And like it doesn't matter whether tokens are launched on Pump Fund or Bonk Fund or on HeavenDex, like Axiom always has like this user interface where people can trade these tokens no matter where they're coming from. So I do think like a big focus for Pump should be like leaning into live streaming, improving the app so that people are actually using Pump's mobile app, and like owning that front end will be very significant in my own view. Like to like as you said, to have like this kind of mode and not just like allowing any other competitor to spin up a fork and take all the market share if you incentivize like coin deployers or whatever.
I also think you need more like real creators. Like Pump Fund should acquire Thread Guy's whatever streaming platform he's building and just have him stream every day on Pump Fun. Or like I think some of the Gainsy streams, like people would clip those and they would kind of go viral on CT, and that felt real, that felt sustainable. But if you browse the Pump Fun live streams right now, like a lot of them are not super interesting or fun from a user perspective, and I close the Pump app and just go open up Twitter. And so I think that's another kind of direction that they need to go in if they want to actually develop a moat versus some of these mercenary competitors who are going to continue to crop up because that sector is so big in crypto right now. Um, but yeah, I think the sort of marketing angle they've settled on a little bit recently has been like Pump Fun is organic crypto culture, and I remember Alan had a tweet about Fartcoin and how real and uh, genuine the community around Fartcoin was and all these things, and that to me doesn't really resonate. I think a lot of people, how to say this, it sets off alarm bells for me when people who are in very speculative sectors start talking about community, because your community should be your buds that you hang out with. Your community should not be people who, want to use you as their exit liquidity. And so I think that the streaming thing is something, and there's maybe like an opportunity to embed prediction markets, or launch meme coins based off of these streams, or however Pump Fund wants to do it. But just simply saying that these Pump Fund is the home of organic runners or whatever, I don't know if that's really gonna do much for you long term.
Yeah, no, I have to agree with that. I do think, like, just zooming out, like if you think about like new modalities for trading, I do think like speculation is here to stay. Like people are gonna gamble, like there's no other way around it. And like meme coins are here to stay. So how do you like bet on that? And I think like it's like Pump's literally job, like their only job is to figure that out. Like how do you bet on this future where people are still like going to gamble, they're going to speculate like financial nihilism or whatever, like, but like that's their whole job, and I think they have a chance of figuring it out.
Okay, last thing I want to touch on with you, Carlos, prop AMMs. Um, this is a trend that you were quite early on, maybe one of the earliest, I would say, um, which is basically these Solana AMMs that use sort of proprietary market making strategies to get very tight spreads on larger, basically non meme coin assets, we'll say. And these now are doing like a huge majority of the trading volume in like stable swaps and SOL swaps on Solana. Um, they're getting a lot more attention now. Carlos, what's the latest on the prop AMM front?
Yeah, so since they originated in about October 2024, like we've had like 6 or more prop AMMs pop up in Solana. Like the latest one is called Humidify, and they have overtaken Solfi in trading volumes in recent weeks. Like in aggregate, prop AMMs are doing about $5 billion in weekly volume, and they are quoting significantly tighter spreads for highly liquid pairs like the SOL USD pair or like stable to stable pairs. And they have actually taken the majority of market share for these highly liquid assets. So if you look at market share by type of DEX on Solana, you can see that prop AMMs in aggregate represent around 60% of SOL USD trading volumes today, which is higher than traditional AMMs like Orca and Radium, and definitely higher than order books like Phoenix, which are basically insignificant on the L1 today. I do think that we will see this increasing like bifurcation between like highly liquid markets and long tail assets like meme coins on Solana, where you will see that highly liquid assets are dominated by prop AMMs, whereas meme coin markets are just dominated by traditional AMMs.
Yeah, I guess what I've been wondering about with these prop AMMs lately is, what about the Phoenixes of the world, or like the Radiums maybe? I don't know who exactly is competing with um, these prop AMMs that was getting all of this volume before, but are all of them in trouble? And do you think we're going to see like a Radium prop AMM, and this is basically what all of the DEX aggregator space is going to become on Solana?
Yeah, that's really interesting. I think Solana microstructure really favored prop AMMs versus order books on the one side. So like just order books had a really hard time like getting off the ground on Solana. And you can see that in like Phoenix volumes over time, where like market makers just had a significant structural disadvantage against stakers in the network, and also network jitter was an issue. Whereas with prop AMMs, because liquidity is protocol owned, so they don't have any external LPs, and they update quotes based on oracles, and oracles are 100x less compute intensive than swaps, then the market maker in a prop AMM is basically able to push quick updates like multiple times a second. And that's what enables them to have like much better like quotes than traditional AMMs. I do not know if the Radium team is going to launch their own prop AMM. That's an interesting question, but I do think that structure specifically is going to be much more prevalent for highly liquid trading pairs than a traditional AMM where you have external LPs and you have concentrated liquidity and whatnot. I do think these AMMs do have a place, but for long tail assets, because for long tail assets, the market maker is never going to quote the asset because it's too risky for them. And oftentimes you don't even have live Oracle price feeds for these kinds of assets.
Yeah, well put. I think a good place to end, because that'll be a fun one to watch going forward. Carlos, we've covered a lot of ground today. It's been a fun episode. Always a good time getting to do a roundup with you and, share some takes. Hopefully it was a good time. Thanks for joining.
Thank you, guys. And thanks for having me, Jack.
Thank you, everyone. If you listened, we'd love if you'd give us a thumbs up or a 5-star review wherever you get your podcasts. Subscribe. We're on YouTube, Apple, all that good stuff. Follow us on Twitter. If you enjoyed this episode, please share it with a friend, and we will see you all again very soon.